Hey traders, Raghee here, and in this free video we're going to cover 3 markets that we are in right now, and we're managing these trades. And I think one of the most difficult aspects of aspects of trading for traders to master is the management. I think we all focus on entries, we know what the patterns are for entry, but remember, exits are what pay us and quite frankly protect us too. So managing a trade is really a function of something I call pay yourself while you can, not when you have to. And this is especially important for options traders that are listening, but it's important for all traders. Paying yourself while you can, and not when you have to, means that as a Forex, futures, stock, or ETF trader, when a price target is met, in this case say target 1 or target 2, be proactive about it. Don't let the pig in the head saying, well, we could get more. Yeah, if you could get more, that's the remainder of the position that will carry through to hopefully target number 2. With options, it's even more important that as the price moves in your favor with the kind of momentum that benefits the value of what you have bought, this is not writers but buyers, that bullish momentum is absolutely something you want to liquidate your option or a portion of your options position within. Case in point, Disney. We jumped through to new highs, broke the value area high for the month of July, broke a nearby Darvis, and punched up to new highs. That's a lot of bullish sentiment, momentum, and price action. And so into that resistance and the level that I sent out as an alert to liquidate part of the position within was at that 146.5 level. So as we go through 146.5, actually 146.45 was the specific alert I sent. You put your bid in, or sorry, in this case, you're liquidating your call. So you offer out, knowing momentum is on your side. You're not going to hit the bid. You make the bid come up to you because this is, in this case, the seller's market, right? So that's Disney. And by the way, why would Disney be on the radar of a futures trader? Waiting, gang, waiting within the broader averages. Same thing with the next market I'm going to bring up here, XOP. I talk a lot about building positions wide, not deep. I had a theory, I had a setup, I had a theme on crude oil, on the CL futures. And from there come things like Exxon, things like XOP, CVX, XLE, etc. All of which I want to be selling short. My theme is a short sell. The stocks that are related to it would also be short sells. So I had crude, and then I had XOM and XOP, and I didn't fill out the third spot. You don't always have to, but again, wide not deep is nice. Crude was a position, XOM, XOP. Now, XOP continues to deliver. This has actually been the best of the 3 for us, and it continues to deliver. As a theme, and I'm going to all my cards on the table here, gang, so I think it's really important and to bring a certain degree of realism to these conversations. When I look at my whole theme for crude, we came back a lot. I've been right throughout the year, but on this particular series of trades, crude, Exxon, and XOP, it's only XOP that's going to be actually a pretty big winner for us, and it's going to help in terms of the overall position of my book and the position this theme has in my book, this theme of 3 trades. This is going to help actually reduce the drawdown collectively of this theme to half, which is a big deal. So the impact collectively of quote unquote being wrong, or the market not going in my favor, or theta decay eroding my value too quickly to realize a profit, which is really the situation with crude, running out of time. XOP continues to chip away at the loss. So again, wide not deep is a really big deal. And so XOP, I've sent out an alert to realize a little bit of profit, but let's also see how much lower is low. And then, of course, got to talk about natty gas. Now, why is natty gas relevant to us? Of course, it's a futures market. But we played natty gas via the UNG puts. They don't call the natty gas the widowmaker for nothing. And natty gas continues to be, as you see here, nice gap down, brand new lows on UNG, the ETF. And then if you take a look at natural gas, September natural gas, fantastic, brand new lows. This continues to be a market that's, just keeps right on giving. I don't ever set out to hit a home run. Home runs come naturally if the right pitch sails across the plate with my right swing. Home runs to me are when you bet one and get two back. In this case, we bet 1.5 per option, and right now we're at about 2. I think it's like 290 right now, or something in that area. I think it's like 292. So this is, this to me is now home run territory. I'm not looking for them, but do we hit home runs? Yeah, sometimes. But it's a function of the market, not my swinging to hit a home run. Really nice short on the weather. Brand new lows. We'll continue to watch this one, but these are 3 markets we're managing proactively as winners right now. I'll see you in the next update.